Hey, good morning, everybody. Hi, my name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com, and today is Monday, ladies and gentlemen. Yes, the 12th of January 2026. Ladies and gentlemen, the world is going crazy, honestly. There are so many things happening that you even sometimes don't know where to start. But look, about all this and a little bit more in this session, because let's not forget that we have economic data coming out as well. Not much, but still quite important. But yeah, about all that and a little bit more in this session, so hopefully you'll enjoy it. I'll see you in a bit. Alright, ladies and gentlemen, hello, and good morning. My name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com, and today is Monday, the 12th of January, 2026. Look, there's a lot to talk about. Before we go any further, I hope everybody can hear me and see me well. Let me quickly read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. Just let me do my usual good morning in the chat room. Good morning, everyone. Yep, just a sec. There we go. Good morning, everyone. So, ladies and gentlemen, the world is going crazy. I hope you all have your bomb shelters prepared. Certainly, I'm joking, of course, but yes, we are going through some interesting times where the market is just attacked from all the sides, and not only the market, actually, our normal peaceful well-being is attacked from every side. It seems like one country is trying to find a pretext for serving its interests abroad, and also in domestically as well, because again we saw this morning, well, at least this morning I saw that that Mr. Powell released a statement. Jerome Powell released a statement that where he said that the Department of Justice has issued a subpoena on him and the Federal Reserve, and yes, basically it's insane. Anyway, look, before we also go any further, just let's quickly have a look at our website. Just a quick mentioning basically of our website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So, ladies and gentlemen, I will open the economic calendar right now just to quickly go through what's happening on the economic side, just to kind of see what we should be preparing for. But yeah, like I said, there's more to talk about, like what's happening geopolitically, but on the Fed side. So I'll pick up on that in a moment. But first, let's check out this. This morning, okay, Japan was closed. They're coming back on. Let me just double check. When are they coming back? I think they're coming back Tuesday, tomorrow. Yes. So okay, yeah. So they're fully operational tomorrow. Yeah. Just let me double check something here. Okay. Okay. So Australia household spending came out 6.3, quite a good number. Everything is fine here. US, nothing major today. Tomorrow, I think that's where the interesting bit comes in, because we have the US CPIs coming out. Very kind of a very hot topic right now, especially with the recent attacks on Jerome Powell. Inflation rate year on year 2.7. The forecast is 2.7. The previous is 2.7. So look, if by any chance inflation comes out on the lower side, like 2.7, then basically I think that the White House will continue saying that, you know what, I think it's all justified, the attacks. I think that the rates are way too high. Yeah, where the whole attack on Powell is basically justified. I'm showing you this chart here. This is the U.S. Headline year-on-year CPI figure. I talked about this previously, and basically I said, like, look, if I would be applying technical analysis on this chart, which you should not normally not do, but if we would apply technical analysis, then we see a falling channel here that we have. So, and the kind of the rate is fluctuating within that falling channel. So that means that there is, after testing the upper side, we could see further decline. But again, like I said, it's just purely applying technical analysis on something that, well, it should not be done. But in general, I thought it just out of curiosity, out of interest, that's something that caught my eye recently. And if I follow one of these patterns, basically I would say that this is one of my favorite ones, where when we have a strong decline and then a gradual decline, it kind of follows that there's a push to the upside. But look, the inflation is not being seen ticking up, and on the contrary, it has been ticking down. And I think that it could still be on slightly lower side, but let's face it, I think that inflation could be picking up, going back to the highs. When I will give it a go, and I'll say that maybe it's going to be somewhere like closer to the end of this year, where we could see inflation picking up. Why? Well, because I think that after they, humiliate Powell, fully, and they will get rid of him. I think that this is where, when we will see the new nominee, the new Fed chair, and that person will be very in favor of cuts, and we know that. And I think that's this is where they will go heavily with the cuts. They will bring the rate lower, much lower. Currently, it's sitting at 3.75. Maybe they will bring it to 2 or something, or closer to 2. And then basically, we will see increased borrowing, which then will have its effect on inflation, because again, you'll have a lot of money, and yeah, congratulations, it's going to be a little bit more expensive for everybody. Everything will look good, however, in the longer term, I think that, like I said, closer to the end of this year, maybe we'll see inflation picking up again. Again, that's my forecast. I might be wrong. Let's see what's going to happen. But for sure, right now, I have to say it this way, that be careful, because again, I think that the markets will be very volatile. So if inflation comes out on the lower side, let's say, normally you would say that's beneficial for the stock market, but in current environment, okay, theoretically, yes, could be, because then again, they could lead to lower interest rates, and the market might think that, hey, you know what, it's great. But given the fact that we have right now a bit of a we have like a very ugly attack on, not a very nice, or general attacks cannot be nice, but not a very nice move on Jerome Powell against from the White House, yeah, that's where the issue could arise, because the markets might take that as actually as a negative. That the damage of the Fed's independence probably could weigh in more than okay, we'll give you a rate cut in February or something. Well, by the way, we'll have a Fed decision in January, at the end of January, and then the next one is in March. Sorry, not February, March. So the January one is a done deal. It's not going to happen. But in March time, maybe they're hoping to see a cut. But like I said, it's all going to be political. There's not going to be any common sense in here. The only common sense may be that it's beneficial for the White House, that what's happening right now. So long story short, we're watching tomorrow's U.S. inflation number very carefully. We'll see what's going to happen there. and then we'll go from there. Honestly, like I think at this point it's the fact that inflation might come out, let's say, on the lower side, then just like I said, just assuming, it's yeah, but it's not really going to be like that factor, you know, that the driving force of the market. I think the other outcomes are going to be the driving force. Let's go take a look at what's happening on Wednesday. Trade balance from China. This is interesting. Need to beat this very good number. However, I really doubt that they were going to beat the 113. You know, again, let's see. Let's see. I'm not gonna. You know, I think it's going to be on the lower side. But hey, at the moment, you know, we're seeing Shanghai Composite just rallying like crazy. Now, going further, Treasury Gilt auctions here. Core PPIs. Okay, core PPIs and headline PPIs are coming out from the US. So we'll have the CPIs and then we'll have the producer price index coming out. Sorry for the voice. Needs a little bit of tea, I think. So, so yeah. Okay, there we go. Started my engine. So yeah, the situation here with the PPIs. Okay, look, the year-on-year number is at 2.7. We don't have the previous number, but anyway, yeah, because that was a mess. The whole government shutdown. So the moment it's this, but again, we're watching this carefully as well. If it's going to come out on the lower side, okay, great. You know, retail sales, I think that they might come out lower just because this way you can justify, you know, why you need more rate cuts, because you need to boost spending, and you know, like the consumer is not feeling very well. It's very expensive for them, although inflation is falling, right? I mean, theoretically. But again, like I said, this is me just trying to kind of see, you know, find some sort of logic, and these are just my little predictions. I might be wrong, so just like I said, this is just this scenario that I have in my head. But again, we're all analysts, you know, we're all trying to find some sort of logic, but with current conditions, sometimes it's difficult. Look, going further, we have the EIA crude oil stock change, the usual one, nothing major further. A few speeches, yes, Fed Williams speech, Fed Kashkari speech. I'm wondering if there's going to be something coming out of them, you know, around the fact that there is this, like I said, recent attack which came out, recent attack on Jerome Powell, which came out on Sunday, because Jerome Powell came out. Excuse me, ladies and gentlemen, my voice is going down a little bit. So, so yeah, basically, I think that, like I said, it's going to be interesting to see if they're going to say something on Wednesday regarding this issue, or they're just totally going to skip that and just stick to the economy. And I mean, it would be weird that if they would just miss out on something big like that, unless they want to keep it down because, you know, Jerome Powell is leaving in April and they are still sticking around. So, you know, all that stuff. How to say it, not being unity, there could be no unity and no loyalty there. Okay, I think my voice is started now. Okay, look, going further, United Kingdom on Thursday, the United Kingdom trade balance, GDP numbers, industrial production. Wow, a bit of a data dump here from the UK. Eurozone trade balance as well coming out, industrial production. Now, Thursday's continuous and initial jobless claims from the US. Now, it's something that, you know, we keep monitoring very carefully. We're not expecting, as I understand, major shifts here. But again, let's see what's going to happen. If there, you know, at the moment, the job market is not the strongest one in the U.S. because last week we saw the NFPs coming out, and well, let's face it, you know, not many jobs created. So I was talking about this as well. So you know, we're now like sitting in 50s. Basically, we're in this range between kind of 0 and 100, or actually, I should say minus 100,000 to 100,000 in this range, and we're not really shifting from it for a while, I think. because we're barely afloat above, we're sitting barely above the zero, and this is something that the market does understand, but of course, we have this, as the popular words go right now, K-shaped economy, where you have the tech booming to the upside, and everybody's telling you how great AI is and how that's going to be beneficial for those major corporations. Sorry, for people. And we have the labor market in the U.S., which is suffering a little bit. So yeah, it's this is where the issue arises. Look, we're going to have some numbers here on Thursday. So those initial and continuous jobless claims, we'll see how those come out. Philly Fed manufacturing index is coming out as well. So something that's going to be quite interesting to see how the market reacts to this. Apart from that, that's kind of it on Thursday and Friday. Germany's inflation numbers are coming out, and industrial production and manufacturing production from the U.S. So again, the economic calendar is not the most, not the heaviest. I think that we're waiting for next week, and the week after the end of this month to see what's going to happen, how everything is going to shape up. But for now, look, I think that everybody needs to focus mainly on the geopolitics and what's going to happen with Jerome Powell. Now, going into the indices, I'm going to try to go through this a little bit quicker, because I tend to take sometimes too much of your time. But Nikkei 225, look, from the technical perspective. From the technical perspective, I talked about this and I said that, look, if we do remain above this 51,000 territory, then a bit of a rebound here could be possible. However, I would prefer to wait for a push above the 52,630, or rounded up here 640. If we clear that, then yeah, this would confirm a forthcoming higher high. But given that we're seeing the stock market, the futures right now selling off, to be honest, that is a little bit worrying, and that's why I don't know what's going to happen here with Nikkei 225 here, because look, we need to overcome this barrier, right, in order to go higher. We are at all-time highs, and that's why I would say just be a little bit more on the careful side right now, because again, it's the geopolitics that are driving the markets. This whole Jerome Powell thing as well. It seems like the Jerome Powell situation was created in a way to kind of offset, or not offset, but not to make the geopolitics look as the cause of the market sell-off. That's my opinion. Again, I don't know, I might be wrong, but it seems like we had the situation with Venezuela, that kind of the market, there are issues in there with Venezuela, and and now we're shifting towards Greenland, and basically now we're shifting towards Iran, and everything is all over the place. So yeah, I would say it this way, that you need, if the stock market is not gonna, if the stock market is gonna reverse lower, you need some sort of a cause, that why the stock market reversed lower, and you're throwing out this accusation of the subpoena of Jerome Powell, and this way kind of the market understands that, oh, okay, wait, there is an issue there, and the market probably would react more to the Federal Reserve news rather than geopolitics, because geopolitics are always there. They're always U.S. is always trying to invade someone then, and it's kind of like almost like a given, right? But the Jerome Powell situation, that's something unique, and that's where this is where the issue could arise. Let me just double check something here very quickly. I'm trying to understand if my internet is working okay. Yep, it is working okay. Okay, so basically, like I said, and that's where the problem is for me is that um, I am being very careful right now here. I think that if the stock market continues to sell off today, then yeah, we could see Nikkei actually falling below the 51,000 zone, and we could start shifting our attention to slightly lower levels. Shanghai Composite. Now this one's interesting, and right now it's rallying, it's going nicely to the upside here. Like I said, keep your eyes on that trade balance that I talked about, and that's like I said, that's coming out on Wednesday. Was it correct? Yeah, on Wednesday. So keep your eyes on that one. Look, for now everything's pointing just higher and higher. You can look at this. This is a monthly chart, right? And look how far we have traveled, and we're still traveling, and it seems like we want to go and hit that 4,317 territory marked by the high of the highest point of July of 2025. Oh, sorry, 2015. I think for now there is still room, but if that trade balance, if we see a bit of a disappointment in the in the amount of exports, if the exports have dropped or imports have increased, now this is where Shanghai Composite could potentially reverse back down. So maybe up until Wednesday it could still fly, but then yeah, be careful. Let's jump into Dow Jones Industrial Average. So as I can see right now, for some reason I got kicked out from one place here. Okay, interesting. Yeah, so basically for now the cash index, what I can see is moving to the downside. Let me just try to double check something here very quickly. But yeah, look, on Friday we had a great run, right? We had a great run. We came closer to testing the all-time high again. And but yeah, we failed. We did go higher. But again, we failed to close. We failed to close. We failed to hit the all-time high, and we failed to close kind of here above it. But anyway, for now, look, like I said, the indices are okay. There's an issue here on my side. Anyway, I tried to check some prices here, but last time I checked before starting the show, it was like around 49,200, something like that. So we were on the lower side, selling off a little bit. Look, it's not critical yet, because for me to start shifting maybe my attention to slightly lower levels, a drop below this 49,000 territory would be required. If that happens, great. More sellers here could join in, but again, the selling part would be part of a larger correction to the downside, because I think that, let's not forget, we do have a few upside lines here. Yeah, tentative a little bit, but nevertheless upside lines. S&P 500, we created a new all-time high on Friday. We cleared this little hurdle here, the 6,965. We went in and created a new one, closed a little bit above this barrier. Yep, there we go. So look, I'll say it this way. Like I said, the stock market right now is correcting lower. This level needs to be adjusted. We're looking at now these levels here, this upside line. Now we can shift it and redo it and create a the downside line creates now becomes now an upside line. And look, if you're a little bit on the safer side, I think that you can wait for a break of this steeper upside line here, drawn from the low of the 20th of November. And if we can clear that one, then great. You have more sellers here could join in. So let me just, actually this is then probably going to be for 21st of November. I think this is a little bit more clear. Yep, a little bit more accurate, it seems. So yeah, if we clear this upside line, I think that there is a chance of a drift lower. Nasdaq had a good run on Friday. We closed above this downside line. Yeah, we cleared first of all. We closed above it, And now the question is, can we overcome this 25,000 kind of 827 territory? If we can, great. More buyers could join in. But if we cannot, well, can I say, for now, I need, for the downside, I would probably need a break of this upside line right here. This one's drawn from the low, the 21st of November, the same day as the Dow upside line here. Yeah, sorry, the S&P upside line. Dow could be the case as well, but I'm taking it from the 20th. But yeah, just a simple technical analysis here. Not much to add. Keeping a close eye on everything here. At the moment, I'm keeping an eye on this whole territory. I do like this whole territory. I know it's quite a wide one. It would be difficult to say if it clears this territory, then yeah, go lower. Then might as well say that I'm bearish from around here. No, I'm gonna look at the upside line. This whole territory could be a little bit choppy. It could be up and down a little bit. So just that's why I'd be a little bit more on the careful side. It might not look straightforward as we would like it to be, but nevertheless, something that I'm watching carefully. The German index DAX. I mean, this one is on fire, and it just continues to push and push higher. Honestly, like, is everything that good in Germany? Okay, I mean, I do understand that the current Chancellor of Deutschland is currently in India. And they're trying to make some deals there. India is an attractive market. We understand that. It has the labor force, it has the energy, it has the territory, the land. Yeah, I think that a lot of countries will try to get into India. And especially the Western countries are really trying to get India on their side. But yeah, it's a difficult one because again, let's face it, there should be some balance in the world. Not everything should be like Western, but yeah, there should be a balance in the world, and I think that's that's what's keeping the security of the world. That's why it's not invaded way too much. Anyway, so for now, looking at the German DAX, there could be some more upside. I think the only thing for that we need is to clear some of the some of the all-time highs. Now I'm trying to establish here. First of all, I need to get rid of this Fibonacci. No, actually, I'm not going to get rid of the Fibonacci because it's still a good one here. So, but this, yeah, on Friday we hit the 25,281. On this morning we already cleared that a little bit. So yeah, if we clear the current all-time high, then yeah, I'm gonna go for some higher levels. And the next target for me is somewhere around this 25,478 zone. It's a good one here. It's the 100% on the Fibonacci extension, which is drawn from the lowest point of November to the high of the 12th of December and to the low of the 18th of December. Let's see. Again, it is very tempting to short this one, but I would say do not rush. Keep your eyes on some of these levels. For example, the 25,217 zone here, the high of the 8th of January. If we can get a clearance of that one, then yes, great. More sellers here could join in. Let's jump into the dollar index here. This one's selling off. I think that the markets are kind of taking in the approach of sell everything US because of everything what's happening right now, and this is what we're seeing right now. We're seeing the US dollar kind of on the lower side. I think the markets are being very careful and cautious, especially with the whole Jerome Powell situation as well. Maybe because maybe because the markets understand that the Fed could be forced into becoming even more dovish, going for more rate cuts. is that going to be, this is this, like I said, these are the reactions. At the moment, we're living through a lot of emotional markets. And because, well, to be honest, I do understand people. I mean, I do understand everybody, and I think that it's logical that it is, everything right now is unlogical. At least it seems like that, So yeah, that's why we're seeing the US dollar drifting lower, because again, like I said, there could be further kind of fears that the rates could get cut. That's not beneficial for the US dollar. That's not going to strengthen that, and well, we could see the DXY maybe actually falling off the cliff further. In general, if you ask me, when looking at this picture, we see a range, right? We see a range here, a very wide one, roughly between the 96 point kind of 20 to 100.50. So we have this big wide range, and if one of the sides get cleared, then we'll determine the next kind of, I wouldn't say short term, it would say medium term to long term directional move. If we take the, like I said, the normal technical analysis, you'll see that whenever we have a range, we look at the prevailing trend. The prevailing trend is to the downside. The greater chance for this one is to break out lower. So US dollar could shift further south. If it does break below that 96 territory, 96.2 territory, then hey, I think that 90 could be inevitable. Let's jump into the currency world. AUDUSD. So we're seeing a little bit of a rebound here. So I talked about this on Friday, where I said, look, we formed a rising wedge pattern here, and we broke the lower side. According to all the TA rules, that's what should be happening. We should be breaking the lower side because it's a rising wedge. According to all the TA rules, such patterns tend to break to the downside. But of course, politics got in the way, and we're seeing the weakness in the US dollar, and this is where we're seeing a nice reversal back up. Look, maybe it's just a retest of the broken trend line, because this is one of those other theories that I keep on mentioning, that whenever we break a trend line, we tend to revisit it from the other side, and this is what's happening right now. So we are revisiting it from the other side, and for now, I mean, let's see if it's going to hold here. If it holds, then maybe another decline could be possible. But at this point now, I'm going to take a very conservative approach here, and I'm going to wait for a clearance of the 0.6660, and this way, potentially more sellers here could join in. For the upside, a push of the 0.6766 could do the trick for a few more buyers. I know that I'm missing out on a lot of territory here, but I'd rather be safe than sorry. AUDNZD. Okay, this one is still holding above the 1.1636. I think it's a good territory, a good target, which we cleared. If we stay above it, then I'm going to continue targeting the upside. For me to consider the downside, well, I need to see a drop somewhere maybe below this area, and actually this 1.1495, or maybe here, maybe 1.1516. So look, for now, this is, like I said, this is what I'm watching here. This is the zone here, and if we do clear it, yep, I'll go lower. AUDJPY. Okay, look, the Japanese yen. Now, Japan is one of those that is struggling right now as well, because again, the currency continues to devaluate. We do know that we are going to get the BOJ interest rate decision in a matter of 2 weeks here. I think it's going to be the Wednesday, or wait, Thursday. No, wait. When's that? Interest rate decision. Come on. That's going to be on the 23rd. Sorry, that's next week. There we go. 23rd, Friday. Keep forgetting this one. There we go. BOJ interest rate decision. Now, look, the guys in there are like on the right path now. I think that what they want to do is they want to remove the whole carry trade idea and just kind of go for those rate hikes so that the money wouldn't be flying out of Japan, so they would stay in Japan. And for that you need slightly higher interest rates, because again everybody was borrowing cheaper, in Japan, and then putting that money somewhere most of the time in Western economies under a higher interest rate, and there we go, boom, kind of gaining on that. And right now we can see that the Japanese yen continues to devalue, although which is a very interesting, like I said, moment. That's why this currency, the Japanese yen, right now is in the spotlight, because it is devaluating and it should be strengthening, when you see like kind of a shift of funds into something less risky, into safe havens such as gold and silver, which I'll pick up in a bit as well. When you see that kind of shift, Japanese yen is one of those where you kind of shift to, where you shift. And at the moment it's not happening, and I think that it's mainly because Sanae Takaichi really wants, continues to increase government spending. She really is in favor of government spending because, well, she came in last year, at the end of last year, and she promised to do this and this and that. And for this and this and that, you need money, and you need cheaper money. So I think that at this point, they're going to be like delaying the rate, the rate hikes, because the bank is right, the BOJ right now is on that path, hiking. The January meeting, nothing will happen in there. No, they're not going to do any hikes here, or anything else. They're just going to keep the rate unchanged, and kind of that's it. So long story short, for now, we're watching, like I said, we're watching this very carefully. I said it on Friday as well, that the Japanese yen will continue devaluing for some time, and until maybe the stock market starts crashing heavily. Looking at this monthly chart here, AUDJPY, it still has room for some upside. Back in July of 2024, we had this big turmoil where it was also, selling off. The Japanese yen was selling off very quickly, and the Bank of Japan had to intervene a little bit, and they saved the day. But right now, yes, we'll see what happens here. I think that there could be more weakness in the Japanese yen. Euro USD, let's have a look at this one. By the way, while I am on the monthly chart, look at this. Aren't we forming something of a possible ascending triangle here on the Euro USD? Well, let's face it. Let's see what's going to happen here, because again, for now, like I said, I'm watching this very carefully. I am watching this barrier, which is roughly around the 1.1810, something like that. If that gets cleared, amazing. More buyers could join in. Today, we're seeing a strong move higher, purely because of the weakness of the US dollar. But again, yes, as I said, 1.1810, at least the clearance of that area would be needed for me. Euro CHF. Okay, look, the Swiss franc is on the stronger side. Again, Swiss franc is seen as a safe haven, so together with gold and silver, investors are kind of pouring money into this one. So for now, I think that there is a chance for this pair to move back down, but I think let's not forget that we're currently in a somewhat of a range. EUROJPY, now this one's pushing, yes, higher, but I need a clearance of this 184.92 zone. If that gets cleared, the forthcoming higher high will be confirmed. Going further, oh, by the way, EUROGBP, okay, we're still in the falling channel, and we're forming, something of a maybe possible bearish flag. We have a pole, we have a nice correction here back up, so maybe something of a bearish flag is being formed. But if you're looking for some lower levels, well, I think that's straightforward. Wait for a drop below the 200-day EMA, shown here as the white line. Going further, GBPUSD, ladies and gentlemen, yes, pushing nicely to the upside, but this one is a little bit tricky. We're getting a hold up here slightly below the 20-day SMA within my Bollinger Bands here. So if that holds, maybe another decline could be possible. That said, I'm going to take a very conservative approach and I'll wait for a drop below this territory, below this 1.34 zone. If that happens, great, more sellers could join in. GBPJPY pushing nicely to the upside here, and well, we already approached the upper side of the rising channel here. But I don't want to rush into conclusion yet. Maybe this is going to break out higher. Like I said, this is one of my favorite patterns. Whenever we have a strong move higher, but then a gradual move to the upside, it kind of tends to break lower. That said, this doesn't look like a normal pattern like that. It's a little bit on the flatter side, I would say, even. So the tilt is not like, it's not tilted too much. We'll see how this is going to play out. Let's see if this is going to break out higher, but given the weakness of the yen and potentially further weakness of the yen, I think that this is where the path could hold. We could see further moves upside. USDCAD. Okay, USDCAD, we're seeing some strength in the Canadian dollar. Guess what? Oil is strengthening. So markets are fearful that there could be damage to the oil supply, because again, Iran is number 4 in the world in terms of oil production. So yeah, sorry about that. Yes, didn't have a very good sleep. Probably my brain was preparing for today's kind of weird day. Anyway, so what I'm trying to say here, USDCAD, we're seeing some weakness. We're seeing some weakness in the US dollar. That's adding up. We're seeing some strength in the oil price. That's also adding up to the strength of Canadian dollar. So, do I believe that this is gonna start falling off the cliff? I don't know yet, because look, we did a retracement of how much? Let's see. We did at least 50%, and yep, we did at least 50%. Now we're drifting back down. So look, I don't want to rush into conclusions here. For me to get a little bit more on the bearish side, maybe a drop below this hurdle here, this inside swing high of the 19th of December, which is around the 1.3806. If we drop below that, then yes, great, more sellers here could join in. Maybe even, actually, I could say a drop below the 1.38 zone. I think that, look, this pair does like these beautiful numbers like 1.38, 37, 36, it does. So that's why probably for me the better option is to wait for a drop below the 1.38 and then maybe consider a move higher, but move lower. But if I want to consider a move higher, then just a push above last week's high, above the 1.3919 would be needed for me. USDJPY, there we go. We cleared this area and then we failed to stay above it, or at least we're still trying to, we're failing still. Look, I think that we need to first of all take this downside line away and turn it into an upside line. So if we do get a clearance of this upside line right here, then great. This upside line taken from the low of the 16th of December. If that gets cleared, wonderful. More sellers could join in. For me right now, the upside scenario is kind of the more obvious one. However, I would, just for extra confirmation, I would like to prefer to see a close, like the pair remaining above the 157.90 territory right there. And finally, USDCHF, there we go, beautiful move lower. So far so good. We are approaching, I think, that this nice little upside line right here. So keep that in mind. If we stay above it, maybe we could see a push back up. But my preference is to wait for a break of this downside line and then consider a move higher. But for the downside, yes, a break of this upside line. So the break for the downside line is for the upside, of course, and the break of this upside line is for the downside. I'm not going to really add anything else here apart from just watching further developments with Powell and further developments with Iran, because this is what's going to determine, I think, the further moves in the currency worlds, and actually in all other asset classes. Gold, new all-time high. New all-time high. We hit new all-time high, 4,600, right? 4,600. We did that this morning, and there we go. Boom, ladies and gentlemen. First of all, we continue to trade above the 4,550 zone, 550. So we continue to trade above that. So there is, you know, more. There could be more upside on this one. If we're looking for some, lower levels, I think that you need to, at this point, we need to wait for a drop below the 4,550, and then we'll just kind of take it from there. So keeping an eye on this precious metal. It is interesting, but not as interesting as silver, because silver has created a new all-time high as well. And honestly, it is just wow. Look, I talked about this, and I said that last week I said we're in a triangle pattern. The greater chance for this one is to see a breakout higher. Why? Because the prevailing trend before entering that triangle pattern was to the upside, and there we go. We got the break, and we got the clearance of the upper side. We cleared the all-time high, yep. Now the question is, hey, what's going to happen next? Well, at the moment, I think that it is a little bit difficult here. So am I going to consider the 100 level? I will. I think I will, because that would be just wow, crazy as hell. Because look, we started off 2025 being at around $30. We end the year. At around what? It's like around $70, something like that. Okay, $75, and it's a spectacular gain, certainly, you know. But now, you know, we're stepping into 2026. It seems like the $75 mark is the kind of the starting point. So to do another $25 wouldn't be a big issue, especially with the market conditions, especially given the fact that, you know, we have things that drive the precious metals right now. And that's why I'm not really excluding the 100 level. So yeah, what can I say? For now, it's a one-way traffic here. Looking at the monthly chart, because I'm gonna stick to probably the monthly chart for now. This is just the more spectacular chart to watch. I mean, are we committing the same error as we did like back in 1980 and 2011? Or should I say, maybe somebody might say it's not an error. Actually, everything is normal here. Look, I'll say it this way. Eventually, this will have to reverse back down. At the moment, I will consider one little option here. So yes, we cleared the highest point of last week, which was up until today. It was the all-time high. If we clear this this area, and we already doing that, if we continue to stay above that area, above the high of last month, I think yes, we could see some further action towards the 100. But if we somehow fall and stay below and continue to stay and struggle to move back above the 83.75 territory, I am going to lean a little bit more towards the downside, ladies and gentlemen, because again, at one point it will have to drift lower. Platinum, let's have a look at this one. Again, monthly charts are explaining everything right now, showing the bigger picture, showing the real picture. So yeah, platinum is rallying, continues to rally. We overcame this barrier. Again, watching it very carefully. This is the highest point of 2008. If we stay above it, then yeah, I'll go further north. But if we struggle and we fall somehow back below the 2,300, then great, more sellers could join in. Palladium continues to push higher. Now, this one's a little bit of a different animal. I think that even if gold, silver, you know, they start selling off, I think that Palladium could remain, you know, could keep its value at least a little bit more. Copper, yes, obviously all-time highs. Let's jump into oil, ladies and gentlemen. Oil, we broke the downside line. Now this is interesting. So now at this point, I'm going to lean towards the upside as long as we stay above the downside line and above this 58.80 zone. And for now, like I said, I will just continue aiming higher, especially if we also clear the 100-day EMA shown as the blue line. In order to shift our attention to some lower levels, well, look, I would drop back below this downside line, would be nice. But ideally, a drop below the 55.15. That's what I need to see in order to go to the downside. Brent oil, similar story. We broke the falling channel. We're now testing this area. This is what I was aiming for. Now let's see if we can clear this down, this barrier right here. If we can, great. More buyers could join in. Natural gas, there we go. We broke the upside line, and so far so good. I talked about this on Friday. I said that if we do clear this upside line and we stay below it, I think that there could be more downside to come. Ladies and gentlemen, let's jump into the crypto world. Bitcoin looking good here. Look at this reversal today. Look, first of all, I think we're getting closer to retesting again this upside line that I talked about. This one's taken from the low of the 18th of December. So as long as we stay above it, then yes, there is a chance of a move back up. But if we start breaking this upside line, ladies and gentlemen, more sellers here could join in. So yep, this is what I will keep an eye on. So let's see what's going to happen here next. Bitcoin Cash, there we go. Beautiful move to the downside. Can I say, I mean, at the moment everything is fine, but the thing is that the positivity is not off the table, because the upside scenario is not off the table, because we are retracing, yes, but we're still above but we're finding good support near this 20-day SMA here within my Bollinger Bands on the daily chart. If we do break the 20-day SMA, okay, I'll go lower. I'll go for a larger correction to the downside. But at the moment, we're bouncing above it. So, let's see what's going to happen next here. Ripple, very quickly, continues to slide. Everything is fine as well. I think that we could see a larger correction back down, maybe even all the way towards that, psychological 2 level, which we're not far from. So let's see if we can hit that. And around here, we have the 20-day SMA on my Bollinger Band on the daily chart. Ethereum, so with this one's holding up a little bit better, but you know what, now I think it's time to redraw these arrows here and basically have a more accurate approach here. So we're getting into a bit of a squeeze, so we're waiting for Ethereum to get out of it. Litecoin, drifting lower, falling below the $80 mark, and that's the interesting bit. So we're falling below the $80 mark, and it seems like we want to go and test the 74.80 zone, something around here, and yeah, then we'll go from there. Dogecoin is sliding along the the downside line. It's not really falling below it, but is moving lower, but kind of sliding along it on the top. Kind of leaving a door open, or like 1 foot through the door, in terms of if they want to rebound suddenly, and go higher. So for now, I'm going to be a little bit more on the careful side here. Cautiously bullish, but not excluding the, a stronger move lower. Polkadot is still struggling with that downside line. It wants to go and break it. This downside line is taken from the high of the 19th of September 2025. So if we do continue to trade below that, I think that there is a chance of a move to the downside. And finally Tron, my beloved one. This one is still holding on nicely. This one is still holding on nicely. This one had a great move to the upside, found resistance near the 0.3012, and now we're seeing a little bit of a correction back down. But we're still above all my EMAs on the daily chart, which could be seen as a positive sign. Let me just get rid of all the drawings here, because I want to have a look at have a fresh look. Yeah, so I think that this is something that we will be monitoring very carefully. 0.3080 is another interesting obstacle. 0.30 30.12 is the barrier that I'm watching to start considering some higher levels again. But let's not forget we're currently seeing a little bit of a retracement, so an opportunity to go for a larger correction back down is not off the table, especially if we fall below the 100 and 200 day EMAs, which currently coincide. Ladies and gentlemen, that is a wrap. I managed to stick to my 1 hour this time, so thank you very much for tuning in, ladies and gentlemen. Whoever's watching this as a live session, thank you very much. Whoever's watching this as a recorded session, thank you very much as well. I hope you found it useful. Join me on Wednesday for another Markets Talk session, but certainly do not forget to subscribe to our YouTube channel, because we do also release top news, where I have these little separate recorded sessions on different matters, that day or that week, which could impact the market. So I give a little take on that. So yeah, check it out. But like I said, if you don't want to miss it, hey, you can always click on that subscribe button. Ladies and gentlemen, thank you very much for watching, listening. I really appreciate your time, your views, your likes, your comments. As always, stay safe, have your stop losses in place, risk only what you can afford to lose, don't overtrade, and everything will be fine. I'll see you on Wednesday. Bye for now.